evening, you're watching Bloomberg Quint Live and I'm Alex Matthew. Well, protests continue in various parts of Maharashtra, the parliament stalls and equity markets give up gains in the last hour of trade. So, what did you miss? Here are the headlines. Dalit groups take to the streets again in Mumbai and several other places in Maharashtra to impose a bandh called in protest against the Bhima Koregaon incident. Markets failed to make headway in 2018, lose grip in the last hour of trade to end flat. Broader markets outperform. CLSA sees a visible earnings recovery among Indian equities in this year. Its top buy calls include large caps like L&T and ICICI Bank. Get ready for a geopolitical depression in 2018, says political risk consulting firm Eurasia. Now, moving on to the top story that we're tracking, you probably experienced this on your way to work if you are in Bombay. But protests in Dalit groups, by Dalit groups rather, continued for a second day in Mumbai and its adjoining areas. They took to the streets today to impose a bandh that's in protest against an incident that took place during the celebration of the 200th anniversary of a battle. In fact, the Bhima Koregaon battle that resulted in the death of one individual. Mobs targeted public transport across the city and disrupted suburban train services by staging blockades at various points. The Mumbai police are out in force across the city and in Thane, with extra contingents of railway police also being deployed. Over 100 people have been detained in the city since yesterday. Now, Ankita Sinha of The Quint went to Dadar station just a short while back to take stock of the situation. Here's what she found.
We're at Dadar station at the moment. Just a couple of hours ago, in fact, this very platform number 2, the tracks saw people, in fact, protesters coming and stopping the trains on the tracks. At the moment, from what we understand, it's functioning fine, but the trains are, of course, functioning intermittently, which is the reason why there's a massive crowd here at the platform. People are waiting to go back home, many of them leaving their offices early, just trying to get back home safely. From what we understand, while in this particular station, there is no problem. In various other stations, in areas like Ghatkopar, in areas like Chembur, the central line areas especially are seeing massive protests. In many of these stations, there still seems to be some problem or the other as protesters are coming and stopping and they're getting into a rail roko andolan right in the middle of the tracks. The police are trying to bring them under control. There are over 35,000 police personnel deployed across Mumbai city, and from the estimate that we gather at the moment, over 150 people have been detained. 150 protesters have been detained across Mumbai city. Meanwhile, for a precautionary measure today, schools and colleges were kept shut. And at the moment, people are not relying on the road transport, but most of them taking the trains, even though they're intermittent in their arrival at the spot, but they're still depending on the trains to take them back home.
Meanwhile, both the upper house and the lower house of parliament were adjourned twice on account of the Bhima Koregaon issue. Union Parliamentary Affairs Minister Anant Kumar alleged that the Congress party was politicizing the issue, while the Congress blamed the BJP and the RSS for the violence. They also demanded that the Prime Minister make a statement in the Parliament. Listen in.
Supreme Court judge should be appointed, and he should inquire this, not the state, because the state government has taken a decision that is a different thing. But here the Prime Minister come and make a statement. I demand, it is my demand, because he always keeping quiet. When such incidents are happening, he is not taking any action.
इतना ही कहना चाहूंगा, मल्लिकार्जुन खड़गे जी जो महाराष्ट्र में समस्या शुरू हुई है, उसका निदान नहीं करना चाहते हैं, उसको भड़काना चाहते हैं, उसमें राजनीति करना चाहते हैं.
Well, high drama in the parliament there, but moving on to the markets now. The benchmark indices gave up gains in the last hour of trade. Dr. Reddy's and Wipro were the top Nifty losers. Pradeep Pandya is standing by to take us through all the action on Dalal Street. Pradeep, over to you.
So if you look at Sensex and Nifty today, Sensex lost some 19 points, Nifty gained just 1. Does that mean we had a listless trading session today? Not really, because Nifty moved in a range of 75 points. At one point of time in the beginning, we were above 10,500. So it was a volatile day eventually, although net we didn't gain or lose much. Even mid-cap and small-cap, if you look at, well, they show quite a positive picture. So heavyweights didn't quite participate in the up move in second half of the trade, one would say. If you look at a few sectors that did contribute or were holding the indices up, I think metal was one and FMCG was the other that was trying to hold on. Some of the heavyweight names, if you look at L&T and ICICI, did well. Commodity segment continues to trade strong, so you had names like Hindalco and Vedanta that moved up today as well. So this one segment which has been doing well, this is a secular trend over the last few weeks actually. Some of the mid-cap names from commodity space, you have Graphite India, Rain Industries, they also continue to perform. But fertilizers also joined in today's trade on hopes of some positive policy developments. So you had RCF, Coromandel, and a whole host of fertilizer stocks moving up with good volumes. Another pocket, if you look at Phillips Carbon, was yet another mid-cap winner, and also Precall. These are also some of the consistent gainers over last few sessions. On the other side, you had Dr. Reddy's that was trading weak. Some negative news flow, of course, there. You also had Wipro. So exporters, IT and pharma didn't find buyers today. Auto was also weak. Maruti continues to slip second day in a row, and also Tata Motors. Some of the mid-cap names that came under pressure today. Arcom fell for the second day in a row. Now some profit booking has really set in. And also 3i Infotech. This stock moved up quite a bit over the last few sessions, giving a return of 60-70%. But now there are no buyers at discount, so down 5%. You also had some disappointing news coming in for BEML that the divestment might be delayed or is on back burner for now. So that stock corrected, and Bajaj Hindustan actually fell 8 to 9% from day's high. This was a big winner of yesterday after that S4A clearance, but today it gave up almost all the gains and finally closed down by around 3%.
Well, thanks so much for that, Pradeep. Let's move on to another story that we have for you. It's a new year and the world's largest brokerage houses are realigning their strategies. CLSA does not expect 2018 to deliver the returns that can match up to the year gone by, but it expects some improvement in the fundamentals. It is pricing in a meaningful earnings recovery and a peak in bad loan creation. Darshan Mehta sums up that report for you.
9 buys and 3 sells is something that they are recommending for 2018. Overall on the market, what they're saying is the fact that they believe that meaningful earnings improvement will come in, and fundraising and bank recap to aid recovery that will go ahead. So that's the broad basis that they were talking about. The other views that they have is the fact that the Nifty target by December 2018 will be 11,400. So a 10% upside is something that they believe, but it's going to be much more stock specific rather than the index specific. So some of the stocks that they are talking on, first of all, Crompton Consumer, a potential 14% upside is something that they believe, given the fact that they believe valuations are reasonable, and they believe that the real estate market is moving up significantly. Again, Godrej Properties, RERA implementation, a shift to organized player is something that will give them confidence of a 26% upside that could come in. The next one that they are talking about, the Godrej Properties, these are the reasons what they are talking about. The next stock that they believe could be a potential stock that you have to buy is HDFC. It's the largest player as far as the market is concerned, the mortgage market is concerned, and it trades at 15 times March 2019 EPS. The next stock that they like, this is HDFC, this is the target that they have given. The next stock that they believe could be a potential buy is ICICI Bank, a potential upside of 22%. It's one of the top picks in the banking space, so ICICI is something that they are recommending. The NPI cycle peaking out is one of the key reasons that they like ICICI Bank. The next stock that they believe could be a potential stock that you have to buy is IndusInd Bank, with a potential of 26% upside. On IndusInd, they believe one of the fastest growing banks, and at 4.3 times valuations are higher but it's certainly justified. So IndusInd Bank is something that they like. The next stock that they like is L&T, 21% upside. The entire infrastructure boom is something that will aid L&T going ahead. So they are rather positive on L&T, given the fact that real estate recovery will also help them in their business. The next stock that they are bullish on is Lupin, with a 17% upside in terms of some of the faster resolution expectation as far as their plants are concerned. So they are indicating that that could lead to a re-rating. The other stock that they like is M&M Rural Recovery. 20% upside is something that they believe. Tractor volume traction is definitely there. So they are bullish on, and one of the cheapest plays in the consumption theme is M&M. They also like NTPC with a potential 16% upside. They are rather bullish on NTPC, given the fact that the project commercialization will drive earning growth for the company and valuations are attractive. Now, three stocks which they don't like: Shriram Transport, a potential 31% downside, given the fact that rising yields is something that is a negative for the counter. The next stock that they don't like is Colgate, 7% downside. Valuation concerns certainly there. And the last one, which is pretty much at the same price, is HPCL, trading at almost the same levels. Unfavorable risk reward ratio at a 39-time multiple. So this is something that they have said. So 9 buys and 3 sells by CLSA for 2018.
Now, a lot of stock calls there by CLSA, but here's another report from them that should be interesting. Now that Reliance Industries has commissioned the world's largest refinery off-gas cracker complex, it should turn cash flow positive within the current financial year, according to the brokerage house. It also expects, CLSA expects that Reliance Industries will start monetizing its Jio customer base in the near future. Somit Sarkar takes you through CLSA's projection in this report.
So Reliance Industries' consolidated free cash flow is expected to turn positive in the financial year 2018. Now, this is after 4 consecutive years of negative free cash flow. Now, Reliance Industries, which is one of the most valuable company in India, is expected to report nearly $1 billion of free cash flow as it has completed its capital expenditure cycle, and now these projects are expected to deliver returns in the coming quarters. However, the full benefits of this return of these projects will come in financial year 2019 as these projects get stabilized. Now, Morgan Stanley is expecting the newly commissioned refinery off-gas cracker plant to add around 10% to the consolidated EBITDA of Reliance Industries in financial year 2019. Now, CLSA in reports also mentioned some other monetization plans, especially of the Jio assets, which could lead to a good amount of cash flows for Reliance Industries. Now, Reliance Jio has around 15 crore subscribers and industry-leading data capacities, which can be monetized according to CLSA. Now, 5 ways how it can monetize it. Firstly, by gradually increasing the rates, which will also increase the average revenue per user. Second, by ramping up its 4G feature phones. Third, by launching home broadband service. Fourth, by starting enterprise solution business to monetize its wide optic fiber network. Lastly, it can also gain cash flows by selling differentiated products or services to its existing Jio customers. Now, Jio has around Jio's customer has around 4th largest customer base in India, and it can gain from cross-selling its retail products. Now, recently, Reliance Jio had launched its cashback recharge service, which also offered big discounts on offline and online retail purchases.
Now, the Cabinet has approved the Sojila Pass Tunnel project in Jammu and Kashmir today. The project, once completed, will be the only all-weather route connecting the Kashmir Valley to Ladakh. The government has also approved the so-called Jal Vikas Marg project. It will be implemented on the river Ganga from Haldia to Varanasi at an estimated cost of around 5,400 crore and has been notified as National Waterway 1. The project is expected to be completed by March 2023. Now, you've all heard of an economic depression, been through it as well, but this year, get ready for a geopolitical depression. Eurasia Group, a political risk consulting firm founded by Ian Bremmer, has forecast that 2018 will be the geopolitical equivalent of the 2008 financial meltdown. Bloomberg's Tom Keene and Francine Lacua caught up with Ian Bremmer and Dominic Barton of McKinsey & Co. to understand what they consider the biggest geopolitical risks this year and how companies could prepare for them.
When the global economy feels the way geopolitics do today, people respond. They see it's a crisis. They know they need to do something. They got to bail things out. They got to do infrastructure projects. They got to get the banks ready, right? We had that back in 2008, and everyone knew. Dom and I talked about this. You and I talked about this. We all knew it was a crisis. We had to respond. The geopolitics are easily as bad today, globally, as the economics were in 2008. They might be worse, and yet there's no crisis. There's no sense of we have to respond. In fact, if you look at the Americans, the one superpower in the world today, the one country that could conceivably help to respond to dig us out of this crisis, is actively doubling down. We're saying we have no intention of providing the kind of certainty to our allies, of supporting institutions. So as a consequence, anyone that looks at the geopolitics today has to understand this is not sustainable and that crises are coming.
Don Barton with us as well from McKinsey & Company. Without question, the top think tank research on the street. Your McKinsey Global Institute is just a miracle what you do there. I don't care about that. I want to know what businesses are going to do this year. Dr. Bremer talks about accidents. You can't do 3 or 5 year planning amid a milieu of accidents. What do you see in the behavior of C-class officers this year?
Well, it's the yin and the yang. You have to do, there's growth. I mean, the one thing I don't want to get too depressed, because I think there is growth that's out there, and we should recall that over the last couple of years we've seen that improve. I think the challenge is you have to go after that growth, but at the same time be prepared for these risks. And it's interesting, the number one risk that CEOs see out there is geopolitical. That's the number one risk. And the problem with those risks is they're not probability curves. They're 1 or 0. If something goes pear-shaped, it's bad. So there's issues about your resilience. So while you're growing, what are you doing for resilience? What does your supply chain look like? Will it withstand? How will it withstand some of the shocks that Ian is talking about in the risks that are there? How do you think about agility in your organization to be able to move resources very, very quickly? And then also recall that we're in the midst of a massive technology transformation, the digitization of everything.
We're going to talk to Brad Smith about that. Francine, please jump in here from London.
Yeah, so Ian, is 2018 the year that protectionism strikes back?
2018 is certainly a year where we see a much greater fragmentation of the global marketplace because governments are becoming more interventionist. And part of that is because the Chinese have an alternative model for their investments, and they're going to be seen as increasingly the most important driver of other economies around the world who will align themselves more with Beijing than with Washington. Part of it is that President Trump here in the United States, who in 2017 talked a lot about protectionism, talked a lot about beating up on trade deals, but aside from leaving the Trans-Pacific Partnership, didn't do very much. In 2018, the U.S.-China economic relationship gets worse. In 2018, NAFTA has to get renegotiated in the midst of a Mexican presidential election. That's not likely to go well. So clearly, this is a year where we're going to talk a lot about not only traditional tariff barriers, but also non-tariff barriers and government support / protectionism for their own industries at home.
Well, if you listen through exactly what Ian Bremer said, he's talking about protectionism, and this next story relates to that. The US is considering new regulations to prevent the extension of H1B visas, specifically for people who have applied for a green card. The regulations, which are part of President Trump's Buy American, Hire American initiative, will affect H1B holders waiting for green cards, forcing them to leave the country. The move is expected to affect thousands of Indian IT professionals currently residing in the US. Industry body NASSCOM has come down hard on the tweaks, arguing that they are meant to hurt visa-dependent companies in particular and will not necessarily lead to job creation in America.
These conditions are applicable to visa-dependent companies. And again, the visa-dependent companies are being defined in such a way that it impacts only the Indian companies. Any company which previously had more than 15% of visa workers was regarded as visa-dependent. That definition is now being tweaked under this guideline, under the bill, to 20%, which is basically aimed at keeping non-Indian companies which are significant users of H1B outside the purview of this amendment and restricting the impact largely to Indian companies. So I think these are all significant concerns, but the bottom line is that these amendments do not serve the very basic purpose that they were supposed to serve, namely to protect job opportunities for American workers.
Sure.
On the contrary, since a large percentage of companies that use visas would not be covered through this amendment, it is certainly going to be ineffective as far as the stated purpose is concerned. So from every point of view, it does not make logical sense.
Sure. So just one, slightly broader point. If I understand this right, many Indian companies over the last couple of years have been steadily reducing their dependence on H1B visas. Correct me if I'm wrong. There was a time that 50% of H1Bs given out were given to Indian companies, were given to Indian nationals. We were given to understand that that's been continuously coming down. Now, you're also saying that this bill says the extension to H1B for those who are waiting for a green card will not happen. Could you sort of quantify or give us some color on the number of workers who would be in this category?
No, I think there are several different issues which are getting mixed up in this question. Right. First and foremost, if you take the number of visas, 70% of H1B visas, roughly 70%, go to Indian nationals. This covers both Indian IT companies and non-Indian IT companies, American or other country IT companies, which serve the US market. And it also covers non-IT workers, doctors and other professionals, for example. So while the number of visas, the percentage of H1B visas, 70% of it goes to Indian nationals, the percentage that is used by Indian IT companies is only 15%, which is less than 10,000 actually. And the number of visas used by Indian IT companies, not companies working out of India, but Indian IT companies, that has declined by more than 50% in the last 2 years. So there's what you said is absolutely right, that companies have been bringing down the usage of the visas.
Well, Donald Trump grabbed the headlines early today when he responded to North Korean leader Kim Jong-un's latest threats on Twitter, saying that he has a much bigger and more powerful nuclear button than Kim. He said, and I quote, "Will someone from his depleted and food-starved regime please inform him that I too have a nuclear button, but it is a much bigger and more powerful one than his, and my button works," unquote. Trump's tweet came after Kim warned the US on Monday that the nuclear button is always on his desk and that it would prevent Trump from starting a war. Now, for the first time, speaking about North Korea, in 2 years, the North Korean government has used a hotline with the South Korean government. This comes after North Korean leader Kim Jong-un proposed sending a delegation to the Winter Olympics next month. According to South Korea, officials from both the countries spoke for about 20 minutes to conduct technical checks, and another call is expected to follow on Wednesday. President Moon Jae-in's government has proposed holding talks on the 9th of January at a border village. This would be the first formal gathering between the two sides since 2015. Well, I hope that we caught you up with what you missed over the course of the day. There's, of course, a lot more on the website bloombergquint.com, so you can tune in and find all the market action and a lot more on that. But that's all we have for you today. Thanks for watching. This is Bloomberg Quint.